Do you want to hear interesting investing views from one of the top 30 most powerful women in India? She's a person who uses her social media very smartly to educate investors and very recently felicitated by the Governor of Maharashtra for the impact she has created. Today, I am talking to Radhika Gupta, who is the MD and CEO of Edelweiss AMC. She is a global citizen, but she set up the first hedge fund of India. She is a graduate from Moore University, Wharton, and University of Pennsylvania. She's also been awarded 40 under 40 by Economic Times. I'm very happy to have Radhika Gupta on the show today.
Thank you, Radhika, for being a part. It's wonderful hosting you as always. I was reading through the report that you had shared with all of us last time around, and you share some interesting reasons. You and your team share some interesting reasons why mid cap and small caps can outperform. Can you give your top three reasons?
I think there is a sort of misperception that one mid caps and small caps necessarily have to trade at a discount to large caps, and I think what we are trying to do is address that mid caps and small caps don't have to do that. And by mid cap, when you say mid cap, you don't necessarily mean lower quality. So that was the point that we are trying to make. I think within the mid cap segment, there are a material number of companies, and it finally comes down to earnings that have seen real earnings, also earnings upgrades. And I think that is why we are optimistic on the mid cap segment. In certain sectors, actually, mid caps have been sort of the standout plays versus large caps.
Primarily, earnings upgrade is in certain sectors is one of the reasons why you strongly believe in mid cap.
And there was a long period, if I can just add one point, where large caps had outperformed mid caps. In fact, there was a period of historical underperformance of the mid and small cap segment. And I think over the last few years, what you're starting to see is that turnaround. And the belief is that if the earnings trajectory continues as is, and we, come back from a 10-year earnings low, then there's reason to believe that that will sustain.
The mid cap returns are front ended, and there is a wonderful explanation of the illustration that you've given. So, how does an investor benefit out of this data point? What I'm trying to ask here is that I don't know whether that front-ended part is already done for mid-cap. So I'm not sure whether I should enter mid-caps at this point in time.
I think the important thing for an investor, and I do understand while putting this data out, that of course mid-caps and small caps are also a volatile asset class. I think the point that we're trying to make is that if you do see an opportunity in mid-caps where valuations are attractive, knowing that those returns will be front-ended, there's a lot of sort of way to enter that often happens in the mid cap space. So if you do see an opportunity in the segment, you should look at it. And I think mid caps should be a meaningful part of your equity allocation. I think asset allocation is the right way to make sure that you capture that opportunity and you're there to capture that opportunity. I know timing is extremely difficult, as you said, but I think making sure that mid caps are a meaningful part of your allocation solves that problem.
So to put it another way, even if you have, while the data points out that the first or front-ended part of the rally is important, it doesn't mean that you should not participate. In fact, you're saying that please be in mid-cap for as long as the allocation allows you to do so, and don't try to time in and out of it.
Because timing is extremely difficult.
Absolutely, yeah. I mean, we have told this 200 times to, maybe 10,000 people, but I don't think... the questions are always around saying, should we enter mid caps at this point in time, or again, mid cap, should we enter equity at all at this point in time, and stuff like that.
And as I said, the solution to that is to make mid caps a meaningful part of your asset allocation.
And one other thing which I wanted to ask you is the report very clearly mentions that you're very positive on electronic manufacturing services. I know there are many other reasons for it. One of them, which is my own favorite, but I wanted you to tell people as to why you're bullish on that particular space and how does one benefit out of it.
So I think our positive view, I think the reason we have talked about electronic manufacturing and we hold select names here in the mid-cap fund, the thesis behind that is the fact that, a rising share of global exports, will play a part here. There's also some element of import substitution that will help. And we also feel that, demand will be buoyant because as incomes rise. So this China plus one strategy that people have started talking about, while it doesn't all come to India, at least it will give Indian businesses a chance to come in here. And the government is doing a fair amount of stuff in terms of Make in India, PLI, etc., etc.
And what's your view? I mean, I very recently, like yesterday, there was a $10 billion announced for the semiconductor industry in particular. Is that also linked to what you're talking about?
Exactly. So I think that would fall into the same bucket, although it's a subset of electronic manufacturing.
So talking about social media, I know you're very active on LinkedIn, Twitter, and one thing that I've noted is that you try to bring in investor education in your own way, in very different way, and also give a lot of motivational quotes to investors and also to other people concerned. One thing which caught my eye really, and I'm sure a lot of people also liked, is that you've pointed out certain books and you've categorized them and also placed them in your Edelweiss website. So, any one book that you think in the recent days that the investors who are watching this particular podcast should read?
Oh God, one book is extremely tough, but we like book summaries. I mean, I'll tell you some stuff that I like. I really like the book Nudge, which I've liked for a long time, just because I think there are lots of books that address the problems that, the mistakes that investors make, and beyond a point, you don't want to hear about the mistakes. Very few books talk about human solutions. So I think that is a very good book. I think there are many good books that we put on the book summary, and this is a plug, but on the book summary section and also in podcast format on our website. And the reason, interestingly, we do that is a lot of people don't like to read full-length finance books. I mean, they can be a little tricky and a little dull. So this is a good way to see in 4 pages if you like the content, and if you happen to like the content, then you can go forth and read it.
You're being very creative. Edelweiss as an AMC itself has been very creative on the debt space. So everybody today asks me what next there on the debt space.
Okay, what next on the debt space? So we actually just filed one fund. So I think this is the first time I'll be talking about it. So we have been a big advocate of the passive fixed income space. So far, the work we have done is largely in the target maturity fund space. It started with Bharat Bond, and then we have done all these SDL PSU offerings, and we are very excited. Look, the category is 55,000 crores. We are 45,000 crores. We couldn't have asked for more. It's 80-85% market share in a growing category. We are committed to doing more work in debt passives. I can't speak about new launches yet, but we just filed a very interesting first to industry product in this space on the shorter end of the curve. We've done products that are 2035, 2032, 2031, 2025, middle end of the curve. We're now trying to do things at the shorter end. But our research agenda on debt passives is very interesting. We think fixed income can be made a lot more fixed and a lot more simple. And that's what we've tried to do. And that's what our solutions will be. So simple, high quality stuff that's easy to understand.
Okay, yeah. I mean, you've been always creative. That is something which I've seen about your particular AMC on the debt side. And finally, on the last question, I'm sure everybody would have asked you this question before itself, but what are the key risks going forward to the market, other than, of course, the new virus variant, other than inflation, and other than rate hikes?
I think you've covered everything that is. So
right.
maybe I'll just stick to because the real unknowns are absolutely unknowns. I think Omicron, by the way, is not something I'm not trying to dismiss it, but I just think that people, even if you can scientifically estimate Omicron, its impact on markets is harder to estimate. I mean, recall the second wave of COVID, right? It was very difficult for India as a country, but it was actually not very difficult for markets. So whether Omicron will be severe, whether it will lead to lockdowns, whether it will affect markets, I think it's too, difficult to say. I think India inflation and global inflation more than India is a little bit of a risk. We are already starting to see that reflect in the earnings of some companies. Now, whether it's one quarter or that's a sustained trend, I think that is something that we need to watch out for. And I always say that, pockets of, I don't like to say bubble, froth that are happening in the primary markets and also in the private markets. I mean, if it happens in private markets and primary markets, it's not going to miss mainstream markets. So that is always something you have to watch out for. This has been a market rally with a lot of retail participation, a very new kind of investor base that people also fully don't have a handle over, and how it behaves in a correction is going to be interesting to see. So for investors, it's very important to keep a track on quality, and just keep a check on what they're doing, and not fall for a little bit of this, because there is some of that.
Generally, people think when the market corrects, like we started off with that question on mid caps,
Yeah.
mid caps correct more and small caps correct even more. So, given that,
Mm.
do you still advocate the right, I mean, slightly higher allocations into mid and small caps for a
So
young investor?
So two parts. I think in a short-term correction, whether mid or large corrects more, you can't say. Yes, mid caps tend to be more volatile on the whole.
Right.
For a younger investor who has risk appetite, I do recommend a mid cap allocation if they have the holding power to last 7 years, and that if is very important. I think you have to go in knowing that mid caps are there for the wealth creation, but that there will be that downside. So for the aware investor, I absolutely recommend it. If you're doing it without awareness, then there's a different question altogether.
So, thank you, Radhika. As usual, you've been excellent and very crisp, and thank you so much for that. I look forward to talking to you even more.
Thank you so much.